Great. So welcome CW members and community. I'm glad you were able to hop on. We are really lucky to have Andi Shively of Key Figures with us here today. And she's going to talk about managing finances in a crisis and also walk us through an Excel tool so you all feel a little better prepared to work with co-ops and help them through this weird and difficult time. And with that, I am going to go ahead and pass it on over to Andi.
Thank you so much, Alex, and thanks everybody for taking the time to join us today. So let me share my screen. There we go. So as mentioned, I'm Andi Shively. I work with Key Figures. We're a worker-owned cooperative based in Austin, Texas, working with businesses and nonprofits all across the country, providing tax preparation, bookkeeping, and financial management solutions. Today, I'm going to talk primarily about managing cash in a crisis situation. Just having spoken with Alex a little bit in advance, getting a sense of where folks are probably coming from. I understand everybody here has probably got some experience working with clients and their own organizations in terms of managing cash, but it's a little bit of a different scenario when you're in a real crisis situation. So I'm going to be focusing primarily on that. And then, as Alex mentioned, going through an Excel tool, one version of an Excel tool that we've used both in our own business and with our clients to help manage cash flow, both in crises and outside of crisis situations. As we go, if folks have clarifying questions to help understand what it is that I'm getting at, please feel free to ask those as we go. But otherwise, I think we're a large enough group. Let's hold our Q&A kind of more generally for the ends. So there we go.
And if you don't want to forget your question, you can put it in the chat box, so we'll have it for later.
Yes. And Alex, I will rely on you to kind of keep an eye on that. And if there's something that needs to come up right now, feel free to just jump in and do that. Excellent. So couple of just general principles when approaching cash management in a crisis situation. The first is, and you'll see this this come up repeatedly during my presentation, the whole thing is collect information, analyze, act, repeat. So the projection tool that I'll be showing you for cash flow is very much a way to try to project when and where you're going to have cash flow problems, to try and understand how big they are so that you can plan accordingly. But as I'm sure you all know, any plan is not the actual future. And the point of a plan, in my opinion, is really to understand what it is that you thought was going to happen in specific detail, so that as things happen differently, which they will, then you can understand what is actually happening and where you need to change your plan to manage your organization effectively. So this tool is an iterative tool for collecting information, analyzing it, deciding how to act, and then going back to the beginning of that process. Time, I would just want to stress what a critical factor time is when managing cash flow. And a big part of this tool I'm going to be showing you is to try to understand where timing happens. It's a weekly cash flow tool that I'll be showing you, and that's because the timing of things really matters. You may, in general, be profitable, but if all of your expenses hit in the same week as your payroll, as the same week as your loans, loan payments, etc., you may suddenly have a cash shortfall. Additionally, even if you know that you are going to need cash, by X point, let's say you need $10,000 in 3 months, you've got to get your hands on that money. And so applying for debt takes time. Identifying friends and family loans, getting preferred shares in from your members, making decisions about cost cutting, all of those things take time to implement. And so that's why time is just such a critical factor. The next thing I want to stress is just knowing what you can control and what you can't control. Some things you cannot necessarily control your lease payment. For instance, if you have a brick and mortar location, you can control to some extent your ability to negotiate with your landlord, but you can't actually change that amount. However, if you've got some key vendors that you could temporarily do without their services or goods, then you can kind of control that. You've got some control over how much you pay on your credit card and when you pay it, those kinds of things. It's really important to focus on what you can control, and not waste time trying to impact things you can't impact. The last thing, two more things, daily decision making. So the tool I'm going to show you is a weekly tool, but having used this, particularly with a client who really was in a kind of constant cash flow crisis, your actual cash flow decision making is a daily activity. So, you know, we may have a week when we get to this tool that shows that you're going to be fine. You're going to have $5,000 in the end of the bank at the end of the week. But that doesn't mean that there's not some day in the middle there where payroll hits and the AR hasn't come in the way you thought it was going to, and you could have a cash crunch in that week itself. So the more, basically, the tighter cash gets, the more time and energy you have to invest in managing it. It really needs to be a daily activity. And then the last thing I want to say, and this is just from experience of having worked with clients with very severe cash shortfalls, you got to be emotionally prepared. This is not fun or easy. This is going to involve, could potentially involve, you know, making tough decisions about having to cut back on costs or cut back on vendors, or potentially lay some people off temporarily. It also can involve making payment plans that you think you're going to be able to keep, and then you can't. And it sucks. And I just kind of knowing that it's not going to be easy and being emotionally prepared to have to do difficult things in order to keep an organization alive, it's important. I was surprised by the emotional toll it took, so I wanted to mention that. So those are some general principles. I'm going to come back around to some of that in a moment. I'm going to talk real quick about an Excel tool, and then I will show you an example of it. So again, this is the tool I really recommend using to collect your information, analyze, act, and then repeat. It's weekly cash projections, and I cannot stress enough the extent to which you really have to customize this for every scenario. So I made an example that's based on a I vaguely defined, I didn't even really define it, retail business. So a business that doesn't really have AR, has a brick and mortar location, has sales projections, but, you know, can't really work on getting collections in the door in an effective manner, can do some marketing to try and increase it, but there's limited control there. And really you're customizing based on what are the things you can control. You want to make sure that those are really available in your model, so that as you're making decisions about what to do with those things you can control, that you can enter those decisions into your spreadsheet really effectively, and see the impact of your actions and analyze what those might mean in terms of impact for your situation. The other thing that you're really customizing is around timing, and I'll show you some of that when I get in there. And then also, what are the big drivers? What are the drivers of cost, of cash out, and what are the drivers of cash in? So if you have AR, for instance, accounts receivable, and you've got collections history, you can say, okay, if we bill everybody on the 1st of the month, we know that generally speaking, 20% of our AR will be paid within a week, and another 40% will be paid within another week, and so on. But if you don't have if you don't have AR as a driver of your cash in, then obviously you wouldn't need to include that kind of detail in your spreadsheet. So customizing. I am operating under the assumption that everybody here has got a pretty firm understanding of financials in general, the dynamics of a business structure, and how Excel works, so that you can kind of take the conceptual framework that I present and apply it with the folks that you're working with. Also, the level of complexity necessary will be very much driven by the level of complexity in the scenario you're working with the client that you're working with. The good news is that you can use historical actuals to guide your starting assumptions. Like I said, if you've got an AR history, then you can plan accordingly. If you've got labor costs that are really tied to your sales, then you can take percentages, you can build out assumptions based on that. And also, if you've got a budget that you're working with, if your client has a budget to work with, that's a great place to start. Everything's been flown out the window with everybody's budgets. But if you can start with that budget, link it in, then you can make adjustments from there. It's like, okay, this is what we budgeted for sales. but what we can already tell, we're going to maybe have 15% of the sales we projected. And then you can get in there and change that and move forward accordingly. So, and as I mentioned before, the main point of this is to project timing and the extent of cash shortfalls. So collecting information, I'm going to recommend that you update this weekly with actuals, and I'll give you a little bit of sense of what that looks like. Tracking and responding to variations as you establish a payment plan with a vendor, as you make the decision that you're just going to have to pay the rent a week and a half late this month. Things like that, you can enter those into the spreadsheet, see what the impact is. As you secure a member loan, you can enter that in, see what the impact is. And then acting, that's why I said it's like set clear cash management goals. You know, really, you want to know how much money you need by when. Very clear, very specific goals, and tracking changes in the plan to see the impact of the projected impact of the actions. So I'm going to switch real quick to this Excel spreadsheet. And here we go. So this is an example based on a retail business. What I have here are two tabs, a cash flow weekly tab and an assumptions tab. I'll show you, is this big enough for people to see? Let me make it a little bit bigger. Whoa, that was too big, apologies. Okay, let's try that. If folks are having difficulty being able to see this, please let me know. Raise a flag in the chat or something.
Andi, there was a question, it might be useful to know now if the presentation and if this tool would be made available to folks after the call.
Yeah, I'm happy to share both the PowerPoint and the tool, again, with the real caveat that you've got to customize or it's not useful. But yes, I am happy to send this out and share it.
Thank you.
You're welcome. Okay, actually, I can leave you right down there. Sorry, managing windows. Okay, so basically what I've done here is we've got a week to week. So this is the week ending all of these weeks. I just used a +7, -7. I started somewhere. My weeks are ending on Sundays. Just pick one and be consistent. I've entered starting cash. This is just all of the cash in the bank that is available for spending. And then the rest of it is calculated out by basically this then just links to the ending cash from the previous week, which is calculated out by the data that is included in here. I've broken our inflows and outflows into operating and other assets, debt and equity. Part of why I do that is because I think it is really important, even in a crisis, perhaps especially in a crisis, to be understanding that you still need to manage profitability, and that your operating expenses and revenues, your cash in and out, you need to get them to work with each other to the extent that you can build sustainability. We do have a short-term time horizon that is potentially very different from our long-term time horizon. And I'll kind of make some comments about the differences between those two at the end while you're doing your planning. But I think it's important to be able to see, like, these are the things we actually need to run the business. This is the money that's coming in. This is the money that's coming out. And then these are things that are more about debt and equity. And major purchases that may or may not be necessary could potentially be deferred. So I've just listed out some main categories. What I would say is when you're building this kind of tool, start with the P&L for the business. So for instance, I did not have time to finish more than one example, but I did, oh, I bet you're not gonna be able to see this. I did start one for a housing co-op as well. And so obviously those, you know, the inflows and outflows are going to look very different. The outflows are more like, you know, the lease payment, or if you're leasing a co-op, or food purchases if part of the housing co-op's services to their member include shared meals, those kinds of things. So let me get that on my way. Start with the P&L. You can simplify it. If somebody's got a really complex P&L, you don't need tons of detail here, but you want to understand the big drivers and you want to be able to see the impacts and changes specifically in areas where you can make choices and control things. So note it's also week to week. So you can see here payroll happens every other week for this imaginary business. You can see here that they are a semi-weekly depositor for this imaginary business. If they are a monthly 941 payroll tax depositor, then that would need, you've got a different timeline for when that cash outflow happens, unless they're using a payroll service that takes it all out at once, in which case you don't even need to split these up, for instance. So here's all of your outflows. And then I've got inflows as well. Now here I did do inflows cash versus credit card, because cash is in hand the day of, and credit card, there's a delay with your credit card payment processor. And that is, and I'll show this when I get to the assumptions, that just has to do with how I structured my imagination around what the budgeted sales are and how we break those up, so we can see what the, like, we can map sales to cash inflows. Moving down, I've got some more outflows here. Again, everything just depends on the particular use case. You can always add things, like if you've suddenly got a member that's like, I've got $5,000 I can put in, I will loan it on a temporary basis, then you can put that in, you know, but if you don't know you've got it yet, that's fine. I went ahead and put like SBA loans and grant relief funds, because these are things that you might already know that you're going to be pursuing. And as you plan, you want to be able to plug them in and see if this plan, if this works to plan, how will that impact our cash flow? And then this all calculates the cash, the ending cash. And you can see it's just a sum of all of the starting cash, the inflows and the outflows. One thing I recommend doing is using conditional formatting to set some visual flags to really help you use this tool. So for instance, looking at this, and this is before we've, you know, this is just like kind of steady state of the business in my mind. This is before you would enter any changes to deal with the fact of the crisis and the impact it's having. You can already see that here, okay, look, we're gonna need more than $55,000 probably by the end of this week. So we can set some capital raise goals related to that. Let's say that we identified a member that was going to buy $6,000 in preferred shares. Then we can enter that in there and it will impact here. And actually what I'm gonna do is I'm gonna pause and I'm gonna show you my assumptions tab, and then I will show you how that impacts. Again, everything needs to be customized, but this is how I made this one up. Oh, starting cash I put. You can tell I use blue fill for wherever I'm gonna put in assumptions. I've always found that to be handy. So here, net payroll, you know, we've got budgeted wages. We're going to start with our budget. We have already projected out for the year, or perhaps you're doing this on the fly if you're working with a client who doesn't have a budget, but you can start with actuals. You know, we think we're going to be paying out about $20,000 every 2 weeks in just gross wages. Well, 15% of that is our estimate of what's generally withheld from that, because that's got a different cash flow timeline. And so you can see where I've used formulas to, you know, here's the portion of employers' taxes, and then here's the portion of the employee withholdings, and so on. The key being the timing. And so you can see where I've used blue fill in advance to be like, okay, these are the weeks payroll happens. So kind of go through and do that, and then you can go through and plug in your assumptions and modify them accordingly. Made some assumptions about when health insurance is going to be paid. Now, let's say that we decide to defer health insurance. You can just move it over here and be like, we're going to have to pay that one late. And then you can come over here and see the impact of that here. So, oh, this was an actual. I'll get to that in a second. But you can see where I just entered that. Now it's showing that we're going to pay that here. So that's how you can kind of use this tool as you make decisions about like who you're going to pay late, or who you've worked out a payment plan with. You can get all of those entered in here, and they'll feed over into your cash flow weekly calculation. So, and pretty much it just works that way. Like some of these things are weekly budgets. Some of them are real like numbers. What I would recommend doing is, as you go, updating not only actuals, but known things about the future. So I know when I was working with a client that was really carefully managing cash flow, you know, we had some estimates about wages, but as soon as a pay period ended, I actually knew what those wages were going to be and could calculate them out pretty quick. And so I could update my assumption based on, okay, we thought it was going to be $20,000 in gross wages, but we know it's actually going to be 22. And you can pop that in there and know right away the impact it's going to have on your cash flow. Getting back, oh, sorry, I'm going to show one more thing. So the sales, you can see again, this is where I pulled from a budget and I made an assumption that 25% of all sales are in cash. So I know those are going to come in same day. And the portion of that left 75% that's left, that is credit card sales, how much of that are we not going to get till the next week? In other words, how much of it is like Friday, Saturday, Sunday sales? So in this particular instance, I've made an assumption based on imagined historical data that 25% of all of our weekly credit card sales happen over the weekend. And so we aren't going to see those in the bank until next week. And then I've just used some formulas here to calculate in the cash inflow based on these assumptions that are entered here. And then that flows over here into our inflow spreadsheet. The last thing I'll just say real quick is, so, as I noted before, we've got this $5,300 shortfall here. I will say I set my minimum, I set it to anything under $5,000, it'll flag me. Depending on the business, how much wiggle room there is, you should definitely not be only flagging $0. And let's say we've got a member that said, cool, I'm gonna buy some preferred shares. And I can give you that money on, the week of February 2nd. So I'm gonna pop over here and we've got our inflows, preferred shares, week of the 2nd. And let's say they said they've got $6,000. So now when I bop over here, we see the $6,000 cash come in, and we see that now our projected cash shortfall is different, and this will continue out. And this is the thing that I found particularly helpful with this tool, is the being able to have some good numbers about what's coming down the road so that we can start planning and raising capital in advance, or cutting costs, or starting to make payment plans with vendors, whatever it is that you're actually able to control. Let's see. I will say I didn't work these in here very carefully, but I created you can create some formulas. If you are putting operating expenses on your credit card, then you can kind of treat that as an inflow and put this as an outflow. It can get fancy. I'm not going to go into it too much because I didn't build it out. I didn't have time to build it out in a way that's very useful, but you might want to track balances on revolving debt instruments that have limits. You want to know how close you're getting to that limit, because that's part of your available cash as well. If we had a line of credit, then we could very easily put in that, we're going to pull $1,000 off of the line of credit here, and then we're going to put it back over here. And in order to get over this hump right here. So the last thing I want to talk about with this spreadsheet is just the actuals. So the data source will impact a lot of, the data source for your actuals will impact a lot of how you get this data in here. I didn't create another actuals tab, but basically there's two ways I can see. One is to pull it out of the accounting system. However, if you are, we work primarily in QuickBooks Online, so I'll just say this about QBO. Other systems might work differently. But if you are doing your bookkeeping in accrual basis and you are using journal entries in any way, shape, or form, your cash reports are practically useless to you. So if that is your scenario, I would not recommend using QuickBooks Online reporting, cash basis reporting, as a way to pull your actuals to update the spreadsheet. Instead, I would recommend pulling like CSV downloads from your bank account, you labeling and sorting them, summing them, and then dropping them in here as your actuals. But either way, every single week you should be doing your actuals, and every single week you should be looking at what's different, looking at what you planned and what happened. So, down here, for instance, the model I built kind of expects $7,500 weekly in cash sales. Around spring break, there's a jump up, that kind of thing. Well, this is what actually happened. We were expecting, we're a little bit lower than expected. And we're a lot lower than expected on credit card sales. Okay, cool. So we know that this is already a problem. How do we start managing that? How do we start paying attention to other things that we can do? Same like up in here, we kind of budgeted $2,000 a week for general operating supplies. Well, in the first week of January, we spent a whole lot more than that. We spent a little bit less than that the next week. Why? What's going on there? What do we need to do to modify our practice or to change our capital raise goals, change the conversations that we're having with our vendors and our customers in order to manage the fact that that is different from our plan. And then, I just use formatting to kind of make it clear where you've got projected and where you've got actual. So that is a kind of an overview of the concepts behind these spreadsheets. Again, with the caveat that, there's payroll in a week. If we're getting down to 85.91 at the end of this week, it might be that there's actually some day in that week that we ran out of cash if we paid bills too early, if we didn't delay for a day or two. So daily cash management. Okay, let me get back to this one. Okay. So last thing is just some comments about what we can control. That is different in every business, as I mentioned before. If you're working with a business that has accounts receivable, then folks really need to be very proactive. They need to be working on collecting them. Send reminders before invoices are due. Provide incentives. If you can have terms that are 2%, 10 net 30, things like that. Do whatever you can that's within the bounds of maintaining the structural integrity of the business, the profitability of the business to the extent that you can under these circumstances to get cash in the door. But honestly, just reminding people, offering to process payment for them, creating a system for that can really increase AR collection timelines. Debt, if you have lenders already, if you have debt already, negotiate with them. I think particularly when we're talking about short-term crisis situations, and you really got to assess how much of this is short-term because this business had to close because of public health measures. How much of this is longer-term, a recession has landed and it's going to negatively impact our business and we need to retool completely. In the short term, you've got the option, especially with these SBA loans and different cash infusions that are available, relief grants and so on. I think you've got a lot of space to negotiate with major vendors on your big expenses and with lenders to say, look, we don't have the cash today, but we're in process with this loan or this grant. We expect to have money in 2 weeks. We can pay you then. Does that work? Can we give you 10% now as good faith? Do whatever you can to negotiate with your lenders. Credit cards, if folks have not been carrying credit card balances, they could start carrying credit card balances in the short term. We've done some things where we have a member take out a credit card and then create an agreement between the co-op and the member where the cooperative assumes the liability of the credit card, but it makes it faster to get that credit card because it's hard for a cooperative to go through that process versus an individual. So there's lots of creative instruments that you can use to bring cash in the door through debt and equity instruments, including short-term or long-term loans with family and friends. Equity, there's preferred shares. You could do a capital call and change member share prices if needed. So there's space there to be creative. In terms of cash, that was cash in, getting money in. Cash out, all of those things also holds. But then the other thing is AP management, really communicate, really negotiate, know your terms and contracts, and then be prepared to prioritize. Be prepared to prioritize based on if I don't pay this bill, then this vendor is going to charge me a late fee, or I'm going to have to pay this interest amount and it's better to pay less than more, or I really can't disrupt this relationship with this vendor because they are critical to our ability to run our business versus somebody else who you already weren't very satisfied with and you've got other options out there. And I'm not saying it's ever I would never recommend don't pay your bills as a strategy, but when you're in a crisis, sometimes that's all you've got is just not paying your bills. So be prepared for that and prioritize accordingly. And then last is cost controls. Where can you actually cut expenses versus just stretching payment timelines? Last, I do just want to point out, I think it's really important to be managing profitability even in a crisis. We can get you just need to pay attention to the profitability. Look for significant structural changes that are longer term versus shorter term. Don't over leverage. Please pay attention to the cost of capital. Work the cost of capital into these models. The particular example I gave did not have a space where we can increase late fees and interest expense and things like that, but I've built those out with that before. And do what's necessary. In the short term, you've got to have cash to keep the doors open, to keep people paid, to pay the taxes. Always pay the taxes first. But in the long term, you need to be a sustainable business. You don't want to get through this crisis, this crunch, just to come out the other side so over leveraged that you can't actually pay back your debts and you end up shutting your doors anyway. So I think that is just blank. And here's one for Q&A. So I'll stop there. Any questions anybody has, discussion? I'll let you moderate, Alex.
All right. I see no hands yet. If somebody has a question, feel free to just unmute yourself. I also muted everyone, so you might have to make sure that you unmute yourself if you do have a question. Feel free to jump in.
Hi, this is Angela from the Hudson Valley. I am curious about how far out it really makes sense to do this. You know, I saw your tool goes pretty far out, but things are really changing on a daily basis. And so is it really worth the time and energy to do all this data entry? You know, like how do you gauge how far out you should go?
Yeah, so I mean, I would say think about with any particular group that you're working with, how quickly can they get a hold of capital? So if they're folks who don't have access to a lot of capital resources and it might take longer, I would do longer, because it's really about identifying when you're going to need cash and how you're going to go about getting it. And so if you know that your time horizon to get cash in the door is 3 months, I would do at least 3 months. I will also say the time that it takes to build this out is in the structure itself, and the entering of the assumptions over time is mostly dragging formulas. So I wouldn't worry too much about, like, it's not an additional time investment to get more weeks per se. It's an additional time investment to get more flexibility in the model so that you can update it accordingly. So that's where I would start simple, and then you can add complexity as you go if you're savvy with Excel.
Great, thank you.
No problem. Any other questions? I'm very curious to hear what folks are hearing from the people that they're working with, because so much of this is so specific to any one scenario. You know, where are folks seeing challenges? I wonder if there's some kind of sharing of information that might be helpful here to help people brainstorm how to work with clients effectively.
This is Kaylee. Oh, sorry, someone else can go ahead. Oh, okay. This is Kaylee Thornley. I work in Montana, and I'm working with a lot of ag co-ops. And the issue they're seeing with planning is a lot to do with the run on grocery stores, because they're seeing, like, they had a record sales week because of the run on grocery stores, but then all the restaurants are shut down.
Right.
And it's the beginning of the growing season out here. So, like, they're trying to figure out how to plan with their farmers to decide what to grow, how much to grow, but it's really hard to predict because, like, the run on grocery stores is outweighing the lack of restaurants.
Right.
So I don't know if you have any suggestions for kind of how to predict, like, two separate markets. I don't know.
So just in terms of the tool, I would set those up as two separate revenue streams in the tool, so that you can, you know, collect information, input it into the spreadsheet, make your assumptions, you know, like perhaps over time, you know, they're going to change, but perhaps on different time horizons. But I would just separate them out as different revenue streams and address them separately.
Okay.
I was just going to say, you know, looking at expenses, you know, marketing is important, but identifying the marketing things that don't work now, or that just you can afford to cut, because and I think understanding the it's easy to make an assumption about how much sales you're going to have, but being able to recognize a trend quickly, sometimes that might just be a couple of weeks and it's like, oh, we better start predicting that it's going to keep declining. Or look, it's coming back. And I think one of the things I was working on today was just trying to put all the paperwork together for a grant. You know, Detroit Economic Development Corporation has some money. They have this scoring system, and just trying to assess whether it's worth doing, because it's a fair amount of work to get it. You have to have a DUNS number, which, actually I discovered that the company had 2 DUNS numbers. So it was useful to go in there. We now got those consolidated. So it's a lot of work. And I think you mentioned time, but it's a lot of work time to get a grip enough to know, yes, this is something I should go for this emergency loan or grant program or what have you. Although grants, I would say it's usually a good idea to put the time in. An emergency loan, what's the value of that loan going to be? And I think this tool you have is a great way to be able to see, what, I should do all the work I need to this week to try to get that loan, because it is going to make a difference, especially if you start to see trending coming back. That is, you're worth getting a loan, as opposed to, man, I'm trending down fast. Maybe I shouldn't be going for a loan.
Right. Maybe I should be making some changes to my business structure and my costs and my expectations. I just had a thought.
Together.
If my thought comes back to me, I'll bring it back up again.
In the meantime, are there any other questions or any other specific examples that people want to share that they've heard about recently or worked with?
Well, I just have a question, Andi. Thank you very much. As a bookkeeper, this is great stuff to me, and I'm always talking about how important it is to keep the business side of things and pay attention to all those details. When this is a super technical question, when you end up putting the actuals in, do you just overwrite the projected in that column of the spreadsheet?
That is what I have been doing. The one thing is, if you do that, you can't run really solid, like projected be actual reports. So you could also, the thing is, if you go in and start messing with your assumptions, then that's going to change. Like, even if you created one and just left it static as your projected and then updated your actual, created a different tab and updated your actual, that'll change. With more complex organizations, it's kind of useful to just every week do a save as and add the date, the week ending.
That's actually what I've done before. I've actually had columns where because I've done this for another nonprofit, and you have a column that's projected and actual, and then I just hide the projected and
yeah. And I would say, again, everybody do what works for you in Excel, and if you're going to need projected be actual, build that into your tool, either as a separate tab or as a separate set of columns that you can hide and reveal, whatever works.
Thank you.
Thank you for that. And I did
want to be doing this all the time, not just in times of crisis, but all the time.
Yeah. Yeah, it's definitely more fun when it's not in times of crisis. I have to say that.
Thank you.
I did remember the thought that I was having and when Brian was speaking, just the one other thing I want to say, in terms of gauging, is it worth putting in the time to go after this grant application? Is it worth putting in the time to build out this preferred shares agreement so that we move forward with that instrument? Moving the needle, I think, is really important. And that's another thing that this tool can provide is, if you know how big your cash crunch is, then you know whether or not any investment of activity is moving the needle. So if you've got a $50,000 cash shortfall coming up, it's probably not worth your time applying for $6,000 grants. But if you've got a $5,000 cash shortfall coming up, then maybe a $3,000 grant is worth paying for or investing the time in. So that's another concept I think is really important. Any other thoughts or experiences anybody wants to share? Any questions?
I'll say one other thing about time. One of the biggest problems we've got right now is just not knowing how long the shutdown is going to be. So I think it's time to restructure, I realize you want to tool that's going to recognize things. But man, the just like the marketing I was mentioning, as soon as you start doing analysis, like, you know what, we need to just not do any of that for now, and we can always hire them back for when we know there's some projected end date.
And that's, I mean, I would say definitely for any businesses that are just straight up closed or practically closed, I think really what the tool is going to get you is a look at what your obligations are that you cannot get out of, even though you are not operating at the moment, what the impact of those are going to be, what your runway is. It's really important to know your runway and when you're going to run out of cash. And so, you know, if you've got these obligations, you need to either figure out renegotiating, getting out of them, or you need to figure out some cash influx for that. But just removing all of the sales and every expense you possibly can, that gives you a sense of where it is that you're looking at, and what your runway looks like.
Yeah, since Antique Touring Company is seasonal, I mean, the way that the news has been the past week, we probably won't be able to, you know, make enough money to pay, say, the insurance note for the year, you know. So, you know, we're kind of thinking about just shutting it down, and how can we shut it down in a way that it will be there next year, you know, is really what we're looking at now. So
how can you mothball it basically instead of really shutting it down? And I mean, like insurance, I don't know in your specific instance what your insurance cost is based on, but a lot of time it's based on gross revenue. And so now would be a great time to call them up and be like, hey, we've got no revenue. Can we get an adjustment on our insurance? You know? Can we do this before the insurance audit happens? Can we do this in advance? So
really,
sounds like Esther has a question.
Hey, Andi. Nice to see you. This is really helpful, and I was thinking too. You know, as businesses are pivoting around new products and services during this coronavirus, like maybe they're doing delivery, which they didn't do before. Would that make sense to incorporate as, like, say, a new line, or how would you put that in?
Anything that's new, I would just put in as a new line item. Now, the thing is, you do also need to be thinking about how can I collect my actuals, you know? So if everything's just getting deposited in account all as one, then, you know, if you're entering sales receipts into QuickBooks, for instance, if you can pull it out of there easily, like that's an important thing to keep in mind, just in terms of the usefulness of the spreadsheet. But yeah, basically you're experimenting. I mean, that's what everybody's doing, is trying to get creative, and they're experimenting with, you know, how do we continue to generate revenue under these new circumstances? So you want to see what your projections are, and then you want to see what actually happens, so you know whether or not you're barking up the right tree, or if you need to back your expectations and so on. So yeah, I would just add them as new lines, new revenue lines on the spreadsheet.
Thank you.
Of course.
Any other questions from folks? All right. Thank you so much, Andi. If folks do end up having some questions, would they maybe be available to email you, Andi, after the fact? Great.
I'm putting my email address in the chat right now. The one last thing, just a parting thought I'd like to offer is, this is uncharted territory for everybody. You know, the experiences that I'm drawing on in making this presentation, we're working with businesses that were having cash crunches outside of this kind of, and I think drawing on each other, and like sharing what we're seeing folks do creatively that works, that's how we're all going to collectively kind of get out of this as best as we can. And so I just want to, you know, encourage y'all to continue these kinds of conversations.
Yeah. Great. Awesome. Thank you so much. And again, I'll share this recording and the presentation and the Excel sheet with you all, in addition to Andi's email. And as a reminder, we're encouraging folks to sign up to participate in office hours so we can help co-ops across the country crisis manage and hopefully get through this this pandemic and make it to the other side. So I'll send out that link again in an email as a follow-up, and let's all be in touch soon. Thank you so much for joining. Thank you so much, Andi, for doing this on almost a moment's notice. This was really, really great. Thank you so much.
Thank you. I hope it was helpful. Y'all have a great day.
You too.
Bye-bye.
Bye.
Ciao.
Bye.